Hello everyone. Today we are taking a deep dive into this Reuters story. Investors pile into US stocks as TINA revival knocks Tiara trades. We are going to break down exactly what happened here, what the potential upsides are, and what the real risks are that every investor should know about. But before that, you are watching Let's Decode the News, where we take the biggest business and finance stories and decode them so anyone can understand. If you are not subscribed yet, hit that button right now. So let us get into the Reuters story. The US-Iran ceasefire in early April appears to have revived so-called TINA trades. TINA stands for There Is No Alternative. And in investing, that usually means one thing: everyone runs back to America. But here is what happened the moment that announcement dropped. Driven by peace hopes, soaring US earnings growth, and the relative insulation of the world's biggest economy to an energy shock. The US produces its own energy, so when oil prices spike, America barely feels it. Europe and Asia, they feel it hard. And this is the number that stops you cold. Global investors have poured a net $28 billion into US equities since the eve of the ceasefire announcement. $28 billion in just a couple of weeks. That is not a trickle, that is a stampede. And here is the part that puts everything in perspective. Until that point in the year, they had pulled a net $56 billion out of US stocks. So before the ceasefire, everyone was leaving America. After the ceasefire, everyone came running back. That is how fast sentiment flips. Now here is what nobody is talking about. Early signals from earnings season suggest the US remains robust. Earnings are the engine. And right now, the US engine is humming while others are sputtering. And here is the number that changes the whole conversation. First quarter earnings growth for S&P 500 companies is expected to be nearly 14%, while European earnings are forecast to grow by 4.2%. 14% versus 4.2%. That is not close, that is a landslide. Earnings drive stock prices over time, not the other way around. And that is exactly where my take comes in. TINA prevailed for years but suffered a setback around the January 2025 start of Trump's second term, with investors pivoting to a Tiara trade. Tiara stands for There Is a Real Alternative. That was the buzzword for Europe and emerging markets. For a few months, it worked beautifully. But before you laugh it off, look at this. Jim Caron, Chief Investment Officer at Morgan Stanley Investment Management, which manages nearly $2 trillion, told a virtual roundtable on April 10th there had been a shift. Morgan Stanley, $2 trillion. When they change their mind, money actually moves. They are not predicting, they are doing it right now. And here is the line that should make you think twice. South Korean equity funds posted a record outflow of $2.5 billion in the week to April 15th, while European stocks posted a $4.7 billion outflow. Money is leaving Asia and Europe at record speeds. That is not a mild repositioning. That is a fire drill. And this is the part that stopped me cold. The International Monetary Fund on Tuesday shaved its 2026 US growth estimate by just 0.1 of a percentage point to 2.3%, but lowered Eurozone growth estimate by 0.2 percentage points to 1.1%. Both got cut. But America got a tiny scratch, Europe got a real bruise. That difference compounds over time. And here's the final number you need to know. The S&P 500 achieved a 10% plus rally in 11 sessions only 15 times this century. 15 times in over 25 years. That is rare. And rare moves mean one of two things: a genuine new trend or a blow off top right before a reversal. All right, that is the news. Now here is my take. The good news is that US earnings are genuinely stronger right now. That is not hype. That is reported numbers. And energy independence is a real structural advantage that Europe cannot copy overnight. So the TINA trade has real fuel behind it. But here is the dangerous part. 10% in 11 days is not normal. That kind of speed leaves behind anyone who hesitates, but it also sets up the next dip. If you chase this rally right now, you are buying near all-time highs after a historic sprint. That is risky, no two ways about it. What could be better? The article barely mentions valuations. US stocks were already expensive before this rally. Now they are more expensive. Earnings are growing, but prices are growing faster. That math eventually matters. What does this mean for your money? If you already own US stocks, do not panic buy more just because TINA is back. If you have been heavy in Europe or Asia, this is a real signal to check your exposure. Not because Europe is doomed, but because the relative strength has clearly shifted. And if you are sitting in cash, do not let FOMO drive you into a trade at the top of an 11-day rocket ship. Wait for a pullback. There is always a pullback. No filter. The market is acting like the conflict is over. It is not. A ceasefire is not peace. Geopolitics can reverse direction faster than any earnings report. So respect the rally, but do not fall in love with it. If you made it this far, you actually care about understanding the news instead of just reacting to it. So hit that like button, subscribe if you have not already, and drop a comment telling me this. Do you think Tina is back for good, or will Tiara make a comeback as soon as the next shock hits? I want to read your takes. I will see you in the next one.